DGIF face. How's everyone doing today? Hope everyone had a good week. Hello, William, Ziggy, Value. How's everyone doing? So the Euro's attempted a couple of rallies this week to no avail, but we're setting up into something that I pay attention to. Potential 3 drives to a bottom setting up here. So just a quick lesson with a magenta line. Okay. So what you have here is we're even diverging a little bit on the first drive here, diverging even more on the second, and look at the RSI reading now. So, you know, I think we're within 20 pips. Sometimes these 3 drive lines you could accelerate through. We call it, Steve calls it throw overs. On the bottom, it could be a throw under. But definitely getting into a position, maybe it's into early next week. Reminds me, we have a super moon Monday, and Norm Winsky's with us today to talk about some Astro stuff and some of his turning point days. So, you know, just a guess that the dollar has a turn next week after making a new high. The euro looks like it's going to the Dixie. Similar situation with 1 here and then 2 here, and we'll see. Maybe I think Andre was calling for 97.40-ish when he was here this week. So very doable into next week. Something else that looks like it's going to make a new high into next week could be the S&Ps here. But if you notice on the S&Ps on the 1 hour at new highs, we're not going to confirm like we did here. But you see we had that divergence break here, and maybe we get another one at new highs. Definitely on the 4 hour, I don't think we'll have a new confirmation. Say we go to 2770-ish. Something like that, another 18 handles. Maybe it's going to be on the news last night. I heard that they were very far apart on China-U.S. trade. So, you know, it would be classic if they put together some type of deal and it ends up being a buy the rumor, sell the fact. Same thing's happening in crude. They are running arm to arm, and crude is above the 78.6 level right now. This was 78.6 was about 460, so it looks like it's going to attempt a new high into that time frame too. Don't believe that we'll, you know, get any kind of confirmation here, but maybe this, instead of this being 1, 2, 3, and this is what happens sometimes, you get another one, so that'd be 1, 2, 3. So all we have to do is take out this high. I don't think that'll be confirming either. The other count was we're going to move to 56 to 58. So we'll see, unless there's a late Friday reversal. And I think yesterday was important in US dollar yen. So we had a pretty good break. And what will be interesting is if it's correct and a new high manifests in the Dixie, you know, we go to 97.40 or so, and US dollar yen just puts in a fib retrace, you know, maybe back to 1080 or something. In that case, if US dollar yen is not making a new high, yeah, Norm's in the house. If while the dollar is making a new high, this is something else I'll look to short. Because I think we could trade back down towards, you know, an important demarcation line, 109.5. This is a pretty good break, about 80, 90 pips. So we get a 50 pip rally, and then we get another 90 or a fib extension of this. So I'd be looking at this next week as a possible sell scenario here. And that's about it. Hope everyone had a either earned or learned this week in the markets. I know I do every week. It's one or the other. Don't like to use that other word that starts with L, because, you know, everything is a process, and we're always learning. No matter how long you've been doing it, it never ends. The learning never ends. So hope everyone had a decent week. I hope that you've become part of our trading community. If not, the weekends, I talk about this every Friday. It's a great time to check it out and navigate over the weekend and check out all the research on our dashboard. I don't know if you're going to find a lot of action in the chat room over the weekend, but you have 10 days to go in there and introduce yourself to the community and see how they share and collaborate and mastermind every day with Blake in there and Steve and Stel and people who take this very seriously. It's for a lot of our members, it's not a hobby or an avocation. It's actually how they support themselves. So check us out. And of course, where you're trading is important. So you can give Justin and you can give Trent a call to get on the reimbursement program to pay for your subscription or get a rebate check. And then again, I talked to Kirk, interviewed him. He's going to be at the Traders Expo as a guest. So going to be a lot of people that, not only the speakers, great place to network and meet people and meet a good part of our team. And they're going to have a little get together, casual social thing there. You could be part of that as well. And, you really don't get to know people that well just over the internet. Okay. They're almost like virtual relationships. Okay. So, you meet somebody, it changes the whole dynamic. Nothing like a handshake. A lot of misunderstandings with texts and the modern way of communicating with each other. So this is an opportunity to meet the people that are working hard for you every day to provide very good analysis so that you have the best possible chance to be successful, where we also supply pattern and plays and give the reason behind it and all the research in different ways, in different methods. Elliott waves, harmonics. Andre was here this week, gave a great presentation. I keep talking about his Dixie number. Blake and Steve do the basic technical and candlestick. Steve, I believe, does. And of course, Stelios, who is really, I do not fade Stelios at your own peril. A lot of his stuff is very long term. It's not immediate gratification, but track record is excellent. And with that all being said, I'm going to turn it over to my associate and leader of the pack, Blake Morrow. And Blake, we had a little reversal in USD MEX yesterday. Do you think that's temporary? Just a pullback? I'm wondering how you're playing that, and also what you think about the euro being on the verge of making another low for the move. If there's anything you see that could be supportive of a potential bear market rally in that going into next week. So
bear market rally on what?
In euro. We make one more low and then maybe finally get a move up towards 114 or so.
Yeah, I don't know.
Okay, that's a real answer.
Well, I mean, the euro is really at a very, very tough spot right now, and it looks vulnerable. I mean, frankly,
okay.
it does. I mean, you look at the euro, and it's. I mean, we've been looking at this for the whole week, and I'm real nervous. What the hell is all that? Do you see that down there? What is that?
Yeah.
Wait, let me
etch and sketch.
Yeah, seriously.
Remember that?
What happened with the RSI? What the fudge sickle is going on?
There's divergence. There you go. There's divergences all.
What all over God's name? I'll just get rid of it. Okay.
I think Steve's son Jason has been playing with TradeView and thought it was an etch a sketch.
I don't know.
Or what I probably did. Who knows? Yeah.
So
anyway.
As far as the euro goes, so we had a pretty important failure this week, and I know we talked a lot about it, but it was, you have this multi-year trend line, right? This dark here.
Yeah.
I'll make it a little thicker just so you can, get a better idea of what I'm talking about. Okay, so we had this, multi-year trend line. Well, not multi-year; it's about a year-long trend line, right? January of 2017. Well, I guess, January 2-year trend line. And so we broke it. Now, we've been monitoring this channel support too. So, there's channel. So it broke the channel, broke the support. And it looked bearish on Monday. We're like, DSI is pretty weak. Don't get sucked in just yet. It bounced back, challenged the underside of the trend line here, and then has reversed. And my analysis all week has been pretty much the same. Let's go over to end of day analysis. You can see just, Tuesday, the euro dollar closed back in the channel, risking a false breakdown of the pair. In addition, key support less held. Then end of day analysis, no change in analysis. As long as we stay below the 113.40 level, the risk is still lower after the rejection of the underside of the trend line. And so we are, we are at risk of breaking lower now. Now the question is, does it usher in more US dollar strength? The cable just sold off a little bit. The Kiwi and the Aussie are very strong. The dollar yen is actually holding up pretty well. I'll talk about the dollar yen here in a second. But the euro is just weak almost across the board. You look at the euro yen's at channel support. See it right here, right? Euro pound. Okay, a little false breakout here. That would make me a little nervous here with the euro pound. And I'm not trading the euro pound. I'm just pointing it out. I haven't been trading that. I'm not trading that until we get some definitive news on Brexit. I think is when next time I'll trade the euro pound. What the hell? Look at this. That was a 200 period moving average. Wow. Is it my screen? Hold on. Okay. All right.
Try reloading the page, maybe.
Yeah, I'll do it. Changes will not be saved. All right. Well, that's fantastic. That's fantastic, Stelios. Thanks for screwing up my. Oh, that look at now. Look what you did. Look at what you did. All your fault. Now I'm completely jacked up. I quit.
It's a new methodology.
Seriously, what the heck? Flip charts. All right. So anyway, you know what? I'll just kind of mess around. It's obviously a trading view bug at the moment, but regardless, the price is right. So, and that's not the TV show.
It was a great show. You remember? You're an old man.
Oh yeah. Okay, so Euro Aussie weak. Euro New Zealand breaking through trend lows. We're at the 127% extension right now. But the euro looks weak almost across the board. Even the Euro Swiss, which the Euro Swiss has been a relatively strong currency, and that's showing some signs of weakness. Matter of fact, we could do this and realize that's approaching some pretty key support here. So the euro is walking a really, I tweeted it, it's walking a really fine line between bullish and bearish. And I'm not in the euro dollar. I have no exposure. I want to see the euro completely crap the bed. And the reason why is because I'm long the dollar max, and that's just going to help out. Now, I want to talk about something really fast, because this has, I'm going to show you guys, if you're not a ForexAnalytix subscriber, you're going to get a little sneak peek at something, okay? This is our active patterns in play. Now, you'll notice that I am long the US dollar Mexican peso. Grega yesterday put in a short based on his pattern. Now, that happened yesterday afternoon, and traders were like, "Hey Blake, you got some in our chat room. Hey Blake, you got some explaining to do. You're long dollar max. Greg is short, Greg is short dollar max. And those are some mixed signals, and I get it, and I understand the idea here of why there'd be mixed signals. First and foremost, I want everybody to know that when I started ForexAnalytix was developed as a system to give you multiple types of analysis on multiple instruments. Okay, you can see, like, when the cable is a great example, when you have bearish, aside from macro, which is kind of neutral right now, obviously due to Brexit, you got bearish signals universally across the board. Elliott wave, harmonic, basic technical, candle. That should clue you in that hey, every type of analysis is pointing lower, so I should start looking for shorts, right? Or something like that. When you have mixed signals, like the Kiwi, the peso, all right, that should tell you that, hey, we're seeing different things. I made it explicitly clear to my team at ForexAnalytix when we started this, and Greg has been with us since the beginning, that when we do analysis, whether I'm posting analysis, it's Steve, it's Amanda, which she does, early in the morning in European trade, you'll get, charts and updates from her. I don't want any of our traders or analysts to be influenced by other people. You may have a lot of respect for me, but that doesn't mean that I'm right all the time. I can guarantee you, look at my P&L, and I can guarantee you I'm not right all the time. All right. Do I tend to make money more often than I lose money? Yeah, that's why I trade for Gellos Capital and been trading for them for a few years. I don't. They don't keep me around because I'm a good-looking guy, which I'm not, because I'd have been fired a long time ago. But I'm saying that I trade there because I make money. So, but does that mean I'm right all the time? No, it doesn't. And so when you have mixed signals, and you have, Greg is going, short, I'm going long, it doesn't make me better than him or him better than me if the short works out or if my long works out. It's just we see things differently. And it's very important to understand that we're not influenced by one another. All right, that is really important to understand about Forex.
You could both be right. You could both be right, just different time frames.
We
and
could.
You could both be wrong, and you could both be wrong.
We could. In this particular case, it's pretty apparent that it's going to be him or I. I mean, because his invalidation level is near my target level. My invalidation level is going to be, above his target. But but they were placed at different times for different reasons, and that doesn't make, like I said, that doesn't make it, I don't look at Greg's analysis to make my decisions. He doesn't look at my analysis to make his decisions. And I don't expect that from any of my teammates.
Also, Blake, I've noticed, at times, these are not in cement. If you have a change of mind or some price development, you don't always stay until targets or stops. If you have a change of mind, you get out. If you don't learn how to change your mind, you won't have any change left, WD Gann. So, see the original. So there is some, it's not carved in cement that you can't adjust.
We make adjustments all the time, and as every trader should. So when we're trading the markets, we're making adjustments on the fly, adjusting invalidation points, adjusting limits, exiting early, because it's based on what we're seeing at that very moment. The market is a living, breathing organism, and it's constantly changing. So you can't, the idea that you can set up a trade and then forget about it. I've never been a believer in that. When I get into trades, there are certain trades that I'm like, dude, I'm getting in and I don't care, and I'm going to get long or get short, and I'm staying long or short. You can pry that trade out of my dead cold fingers if you want, but I'm not changing my mind here. There are certain trades that happen that way, but very rarely. Most of the time it is, we're looking at the markets and saying, okay, I have to adjust this, my expectations based on what I just saw. So, but I just wanted to make sure that everybody's clear here that we see things differently, and I expect us to, as analysts, and as having different methodologies, and that's a good thing, because for you as the individual trader, it gives you flexibility to look at different trades based on different time frames and say, you know, based on the way that I'm looking at the market, this analysis fits my my bill. And that's important when you're you know, you're trading the market and you're like, oh, you know, I am a short-term trader and I'm looking at you know,
Stelios.
well, I'm looking at, like, this is Greg's you know, short-term account, and I'm like, okay, I'm a short-term trader. I'm looking to get long when the cable hits 127, and I'm looking at his count, and he's looking at 127.20. I might say, okay, well, when we get to 127.25, I might actually be interested in being long because it fits into this Elliott wave count. That's great, you know, and where, you know, you may look at my analysis and say, you know, Blake's targeting 127 because that's a 618. Okay, well, maybe then I'm going to be more focused in once we get to that 618, knowing that Greg's count turns bullish right around that level as well. So you're using multiple techniques and analysis to make your decisions, and that's, you know, that's the benefit of ForexAnalytix, is having different eyes and different viewpoints. It's sometimes we all agree, and when we all agree, it's usually pretty powerful, and that's important to also know. Okay, all right. So anyway, to talk about the peso, I guess I'll just state this, that, you know, we came out of this triangle, and as long as we stay above 1920, I'm bullish. And I had a bid at 1920, didn't get hit. We went to 1921.45. My bid, which is a little irritating, my bid, oh, I already canceled my order, was at 1920. It was like literally right here, because I wanted, my stop is actually below 1917, which is the 50% retracement of this move. And I know it's, if it dips back into the triangle, I'm probably going to get stopped out. So my idea was, if we get back down to 1920, I want to pick up some more. So we're obviously at highs of the day right now, but that's, you know, that can change with this particular pair. One last thing I want to cover before I pass it over to Steve is the dollar yen. So the dollar yen was testing. Now I've seen on multiple data sources, the US dollar Japanese yen broke below this ascending wedge, or basically the trend line since the whatchamacallit, the little Asian flash crash. Okay, we broke that trend line. Now we are testing the underside of the trend line now. All right, so I think you got to be a little careful with the dollar yen. I think the dollar yen is a sell, you know, up in these levels. Now there's some news that is, you know, across the wires today that China and the U.S. are, you know, they're making progress there. Sorry, keep in mind Mnuchin's over there right now, and, you know, but everybody's got to paint a rosy picture. While, you know, it's like, you know, I'm not going to talk crap in front of your face, but because you're standing in front of me, but when you leave, I'm going to start talking crap. I mean, of course, China and the U.S. are going to play nice. They're meeting each other right now. We are approaching, you know, a key deadline, so I do expect some sort of deal is going to get put together within the next couple of weeks. However, the market is buoyant on that particular news. What I would be looking for with the dollar yen is to see if there's going to be some sort of failure up here. This was I was short the dollar yen yesterday, and I made some good money. I made some good money short the dollar yen and short the New Zealand yen. And I covered it early. I got out of my dollar yen at 110. I want to say it was 110.50. It's like 6 or something, somewhere down here, because I was short, you know, here. And so I made some good money, and then I kind of missed the latter half of this. But we're bouncing back. Maybe the 110.60 level is going to offer some resistance. Holy cow, this peso is ripping, which I like. I'm happy about that. We are coming right up to previous support. Should act as current resistance here. So somewhere up here we might lose a little momentum, at least, you know, from an intraday perspective. So anyway. Wow, the dollar is really moving almost across the board. Look at the euro. Boop.
There was a statement by ECB's Kure, I don't know how to spell the name, who said the economic slowdown is stronger and broader than we expected. So it's a bit dovish.
Oh, that's bullish.
Yeah,
that's bullish. Greece. All I have to say is Greece. You guys, it's not fixed. You guys are missing payments. So I know you have some friends in high places. Do you want to tell us a little bit about that, Stelios?
About my friends or about Greece? No, I mean, my view being a Greek living in Greece is that things are not fixed, not by a mile, not with this government. So anybody who thinks that they're fixed is quite wrong, and there needs to be drastic change. But for the moment, Greece is under the radar. It's going to resurface at some point, but for the moment, we have more serious things to look at, right? Italy and Spain now, they announced snap elections. It's getting a bit messy.
Ooh, gosh, it doesn't sound good. Well, this is a perfect segue for me to pass it over to you and Steve. Good morning, gentlemen. To the Greeks.
Yeah, to pass it on to the bankrupt Greeks.
Yes, the bankrupt Greeks. So what's wrong with you people? You know, as I said, you people. It's a you people problem.
It's a very simple and easily understandable answer. Greeks are in love with the general concept of socialism. Of course, not the results that it brings, but the general concept of it. And this slow decay is is the result of that. But from what I see,
not Blake's wife. She's as hardworking as Blake running a retail store.
She's an American. She's
American.
She's from America.
She's Americanized.
America. Wow, the euros get smashed here. Dollar is just ripping out of its shoes at the moment.
But I see that
Steve, you're one of the hardest workers I've ever met.
I said socialism. I didn't say and personally, as you know, I'm not the example. I believe that capitalism is with all its issues, it's the best system we've invented as humanity, and so I'm totally against that idea. But whatever. From what I see, the US is really striving to get there as well. I see, all the popularity that
left,
of the left, and you probably will experience it yourself one way or another. But
what's the most capitalist nation in the world, Steve?
At the moment,
yeah,
I would have to say probably.
Yeah, I'm going to pass you the charts, guys. The market's really moving here. I know
have a good weekend, Blake.
You're focusing on this euro that's breaking down.
Singapore, most probably.
Oh, okay.
Hong Kong,
yeah. TGIF, everybody.
You too, mate. Okay, yeah.
Portugal. LOL.
Yeah, absolutely. By the way, the market is indeed, the dollar is indeed ripping. You can see here, and let's go down to a 4-hour chart actually. Here's the USD yen, here is the euro. Let's open it up, and we have data coming out in less than a minute, Stelio, right? We have retail sales.
We had that yesterday, right? I don't think I think the investing.com calendar is not right. But because we had retail sales yesterday, but we have we have Empire State manufacturing.
Don't we have more left over from previous?
I don't know. I'm not sure. Some calendars show it, some don't. Maybe it was yesterday's was delayed due to the shutdown, and we get more today. I'm afraid I don't know. We will know in 30 seconds.
Yeah. By the way, the only bullish scenario that I could see here with euro, because I thought that the path of resistance is lower, is this. And we are currently testing this support. Of course, a little throwover might take place here, but in general, I have to say I do believe that there is a good chance that we're headed lower from here, right? So this is my second case scenario, because I do think that there is a good likelihood that we're heading lower. I mean, we did break anyhow after a long period of time this ascending channel, and we need to see what's going to happen. So, Stelio, if we are to have any data, that's going to be in a few seconds, right?
Yes. So let's see.
Let's see what happens.
So Empire State slightly better than expected. Export and import price index worse than expected, and no retail
worse,
sales.
actually.
So, so retail sales is none of that, and some Canadian data, foreign security. Yeah, okay. So
let's see what
minor,
the is then.
a bit more minor data of the US.
Speaking of the USD CAD, still trapped from this descending trend line. Now, I said that this might be a triangle, but we had very scarce evidence, so we had to be very, very careful. But the fact that we got rejected once again from this trend line, increases for every time we do that. It increases its significance. So I'm closely monitoring. I think I said was it yesterday or the day before that 133.30 is an important resistance for USD CAD. And yesterday we did test that area and we got rejected. That doesn't mean that we've turned lower. I mean, we're still consolidating very, very close to this trend line. But as long as it's holding, another push lower is not out of the question. Now, if we do break above that, I would be looking for 134.50 as the next area of resistance. And probably that will become then a very key level for the bulls, for the bears to defend, because if they actually want to push this market lower for at least one more leg, I do think that we shouldn't see prices exceed 134.50. So 133.30 and 134.50, quite important for the USD CAD. Now, let me also open the question box so we can get ideas. Okay, we have
Steve,
a lot.
couple of things before you continue.
We had UK data. We had UK data today, right?
Correct. We had the UK retail sales, which came in stronger than expected. Which makes a change from all the recent UK data, which has been disappointing. But really, until we get Brexit closure, we've said this before, the data is going to be less and less important. We did have, speaking of the UK, we had a vote yesterday in the UK Parliament, which I didn't really understand why they did it, because it was effectively a motion endorsing the government's strategy. The government lost, but this vote has no legal force. So basically, they can completely ignore it, and which they're doing, and move on to the big vote, which is going to be at the end of the month on Prime Minister May's proposal, whatever that is. We don't know exactly the details yet. So that was something that happened yesterday. It was expected. We knew the vote was happening, but really nobody was paying too much attention to it, and for good reason. Now, on the US side, we talked about Trump, who is apparently going to sign a kind of a funding deal as negotiated by the Senate. This will avoid... yes?
If you remember, I predicted that he might do what he did yesterday, that, yes, he might declare state of emergency to build a wall. And my second prediction about that was that it's not going to fly through courts. So I believe that this is clearly a move for his base, for his supporters. Like, I took it to the limits, to the legal limits. I did my part, and now if it gets shut down, that's not my responsibility. I mean, what else could I do, right?
Yeah. Well, he is supposedly going to sign this deal, which will avoid the shutdown, another shutdown. But he's also widely expected to actually declare a national emergency to get funding to build the wall. So let's see how that goes. But I agree with you. This is a bit of a he's playing these games to show that he's trying really hard. I mean, I don't know how to interpret it. Now, the other thing in the Eurozone, okay, I've been thinking about this quite a bit over the last couple of days, and I'm getting really, really worried about the Euro, because if you look at the major economies in Europe, you have Germany, which we said yesterday narrowly avoided entering a recession, and most of the data is coming in weaker than expected. It seems to be turning. What other big European economies? In the UK, well, we're talking about the UK. It's going to be out of the EU soon. France, you see what's happening with the yellow vest protests. It's all about turmoil. Spain, we're going to have snap elections. Italy, well, Italy is Italy. They might there are rumors that they might have early elections as well. And it's worth noting that the Lega Nord, whatever the Northern League that they're called, they are now the top party, the polling top. And remember, these are kind of on the far right side of the spectrum. So this will bring more uncertainty and unpredictability. So, if you look at the Eurozone, all the big economies, the big countries, they have some problems. So I'm not bullish the Euro, not by not by a long way at the moment.
Yeah, the problem the problem, Stelio, is that we are again, I mean, we've seen it in the past in a situation that from a macro perspective, choosing the place to be having to do with the currency is just trying to figure out who is doing less bad than the rest. You know what I mean? Because between major economies, all of them have big pending issues. There is a clear global trend in for a slowdown in economic growth. So, it's quite tough.
Yeah, I agree 100%. That's about it from me.
Okay, cool. Now, since we have this move lower in the euro, if you remember, I had said in advance that I would like to see the euro break down because the USD Swiss was leading higher. Now, having to do with the USD Swiss, if you want to be bearish the USD Swiss, the only type of formation I see that can play out for bears is this triangle, right? So the bearish case scenario is finding resistance at that trend line and then moving lower. So that's the bearish case scenario, right? But if we do break above, let's say 102, roughly 101.50, then we can be talking about a larger breakout, and then we're headed much higher from there. Regardless, this bull flag that we had pinpointed is playing out quite nicely. Speaking of which, now that we should be getting quite close, let's see where its theoretical target is. Yeah, you see, it's roughly in that resistance zone as well. So that's the bull flag target as well, roughly in the area I described before. So USD Swiss is still doing good. At the same time, Euro USD is breaking down. You can see it here. Now there is close nearby, as we saw with USD Swiss, there is an area of support. It's the extension of this descending channel that was, confining price action for, a decent period of time between the beginning of 2015 and when we finally broke out in the middle of 2017. Now, of course, since this is an extension of a previous channel, that's not necessarily, a very valid or important trend line. It might prove to be, it might not. But what is definitely most important is the recent formation that we broke down from, which is this ascending channel, especially considering that this type of price action is clearly corrective in nature. So if you have, price that is moving lower and then you have clearly a corrective consolidation and then you see a breakdown, it's natural to expect that the path of least resistance remains lower. So combining that with how the DXY was looking, and those of you that are listening in daily, that I'm very, very bearish the dollar in a long-term horizon. But I said multiple times that dollar doesn't seem to me like it's bearish currently, and I like to see what I trade in a chart. My macro thesis is one thing, and I would love to trade it when the charts tell me that my micro thesis is going to play out. But until that happened, this pullback that we got in the dollar had also clearly corrective characteristics, right? And I see this channel, we broke out from this channel, And we seem to be pushing towards the double top formation that we had here, that 97, 70 area roughly. So I think that you need to respect the potential for more upside from the dollar, right? Until proven otherwise. So it's as simple as that, like it or not. Now, having to do with the USD yen, we were speaking about it the other day. Yesterday, we had quite a nice reversal. We almost had an outside black candle. Regardless, we completely erased previous days' appreciation. As I said, the closer we get to 111.50, the more appealing the risk reward for for a movement lower. So if there is one currency pair that I wouldn't be really trusting the strength of the dollar is currently the USD yen. Also combining it with what I see here in stocks, I see that the momentum in stocks is waning. We already have had like the best start in like 30, 31 years after like the second worst December in history. So this type of price action that's completely erratic has a decent chance of creating at least some type of a short-term pullback. I doubt it that we can make it above 28.12, 28.15, for example, in the S&P, which is like previous key area. I'm doing the key levels in the S&P. I've had even since we were at the lows, I've had the bull bear line once we turn lower in this area, the 28.15, because I do think that there is a decent chance for a continuation lower as long as that one is holding. I also see this as a potential ascending wedge. So let's see what's going to happen from here. Personally, I do think that Dale, you mentioned it, and I totally agree with that. I do believe that when we get the US-Chinese deal, if there even is one, it's probably going to be, and I've said it in the past as well, something like the NAFTA, the new NAFTA agreement, which in essence what changed was the name and minor points that really made no difference. So I do think that as long as the deal is pending and they can spin off rumors that things are going great, etc. It's the gift that keeps on giving. But once we get a deal and the market realizes that it's not going to be a game changer, because I honestly believe any kind of deal is not going to be a game changer. I mean, the Chinese are not going to give much. They've already been giving to the US more than the US could ask from any country. I mean, the Chinese for years have been producing tangible things using tangible assets, real commodities, real materials, shipping them off to the US and getting in return IOUs that, in my opinion, at the point of expiration, one way or another, are not going to be valued at the same price. And now, will it be inflation? Will it be some kind of debt renegotiation? But sooner rather than later, we're going to come to that. And I see it's becoming now with socialism in the US more popular, this new monetary theory, whatever it is, that as long as you have debt in your own currency, you can keep printing money and etc. But all that is BS, because in the short term, that's the case. And indeed, the US, as long as it has debt in US dollars, it has no reason to default, so it's not going to default. But one way or another, creating wealth out of thin air is going to have a cost, and that cost is going to be, purchasing power, right? As we've seen, I mean, the dollar has lost a huge percentage of its purchasing power during the previous few decades since the gold standard. We went off the gold standard in 1971, and from what I see, probably we're going to have another leg lower, quite strong leg lower at some point in not so distant future. Now, at the same time, nothing has changed with the bonds. I mean, U.S. Treasuries in particular are still coiling. I mean, this is a textbook, if you ask me. Here it is. This is a textbook consolidation that, objectively, it has to break out, rather soon. I mean, now the range has contracted to, to a very narrow one. So sooner rather than later, we should see some kind of a continuation, and most probably, in my opinion, that will come with some type of at least a corrective move in stocks and a push higher for at least one more leg before we decide what kind of a rebound is the one we've had since the lows. So, this remains my thesis. It didn't play out this week. I mean, we didn't see much happening in bonds and stocks. A little slow drift higher again in stocks this week, but nothing to write home about. And this consolidation in bonds, I do think that it's not going to be probably this week, but next week we should see some kind of a resolution, even if it's a short-term one. Now, yesterday, I made the chart of the day yesterday, and I chose that to be gold. Gold, despite the strength we're seeing in the dollar, is still pushing higher in what looks to me like a bull flag. And the fact that we held this horizontal support area at 1300, says quite a lot. So, one more leg higher, perhaps towards the 88.6% fee, but 1340 is not unlikely. I first want to see, a daily close, as I wrote in the chart of the day post. We first need to see a daily close above 1316. I think that will open the door for a few more dollars of upside before we can then likely see some some weakness, gold rolling over. And as I was saying yesterday, you can see the chart here as well. Silver obviously is underperforming gold, so gold should remain your favorite long if you want to be long one of those two metals. Now, copper is still consolidating within its range, so nothing to see here. Platinum consolidating, palladium pushing once again higher. Momentum has definitely slowed down, but it's impressive that it's still going even at a slower pace. Still no evidence of a breakdown from this ascending channel. So, as long as that's the case, you have to respect it. The next upside target is at 1447, the 200% extension of the last bearish leg. So, it is what it is. Fundamentally speaking, there is a basis for this appreciation, but it's already gone too far in a very short period of time. So, I think that if you want to be long, you'd rather wait for a corrective move first, whenever that comes, before trying to join the uptrend. Now, having to do with USDMXN, since we have this divergence between what Blake thinks and what Gregor thinks, I have to say that the previous move lower looks impulsive to me, so I would be very careful in this rebound. Especially yesterday's candle is quite bearish, and especially I don't like the fact that we got rejected from the confluence of the 50 and the 200 DMA, which both of them were exactly at yesterday's high. So if I had to make a choice, I think, let me see if this aligns. Let me see if this parallel would play out. This to be, this can actually be a bear flag if we hold this. So risk reward would make me favor a short against the highs, actually. But we break the highs, and I think that Blake is in the right side. But until that happens, judging from the previous move lower and this bear flag, I think I'm with Greg on this. But let's see. As Blake said, we are all wrong on occasion. Now, what I wanted to show yesterday, and I completely forgot to show, good thing that nothing has happened since yesterday. So it's still quite relevant, is what we have here in the USD-ZAR. Because in my opinion, USD-ZAR is nicely positioned now for a trade, because we were talking about this move lower being corrective in nature. Most likely, it's low, it's overlapping. And we're currently testing this confluence of resistances. It's the 38.2% fib of this move lower, and at the same time, this descending trend line resistance of this triangle. So, you have two choices here. You want to be short, you can do that by having a very tight stop loss. So, it's a very nice risk reward ratio. But on the other hand, if we break out from here, I would definitely not be short, right? Because then I think we will at least retest this previous high at 1570. So use this ZAR looks good to me to the upside as long as we break out from this confluence of resistances. So, use this ZAR is definitely an interesting currency pair at the moment. Let me see now. Did you pay your subscription, Blake? Yeah, I'm going to check that out, actually. If he hasn't paid it, I'm going to cut his subscription off. He also took him. Okay, those haven't. Is Grega in the house? Nope, he's not yet, but and probably he's not going to be today. If you want me to forward the question, I would gladly do that. Russell looks ready to break out. Yes, the stock indices look still well bid, Kostas, but I won't be buying them here. As simple as that. Good question. USD yuan. Here it is, actually. Now, positive for the bulls. We found support at a very interesting support resistance area. Now, on the other hand, we had this lovely morning star formation here, which was a nice indication that we're rebounding. But I would want to see a move above 682 once again to look higher. Okay, we might even get some kind of an inverted head and shoulders formation building up here, right? You can see it, shoulder, head, shoulder, that might produce some kind of a continuation. But even if that's the case, the level I told you will be the neckline. So that's what I would be looking for in order for me to start looking higher again for another push to the upside. Okay. Yeah, I agree with the Greek comments. China, most capitalist nation in the world. Yeah, that's not exactly the case. Yeah, they definitely don't have communism having to do with their, in how they handle their economy. I mean, only by how they, how government is run. But China is a very, very weird and mixed model, actually. But yeah, they have done many capitalist reforms, but they're not there yet for sure. Everyone wants to make money in China, and there's a lot of them. EU legislation, Eurozone rules don't allow state nationalization or socialism, which is a good thing, because anything that is nationalized, anything that is run by a government, as Milton Friedman had said, if you give Sahara to the government, the government will find a way to make Sahara within a period of time run out of sand. I mean, it's been proven over and over and over again that governments cannot run businesses. Okay, they're the worst business owners ever. And that's due to moral hazard, because the people that make the decisions have contradicting benefits, right? I mean, for example, if you're a politician, you care about getting re-elected, but that leads you into taking business decisions that are not producing wealth. They're doing the exact opposite. They're destroying wealth. Dollar ripping, but gold is not melting. Yes, exactly what I mentioned before. It's one of the reasons why dollar looks quite good, because even with dollar going higher, gold is almost at the highs. We had a friend asking about USD yen. I already covered that. EU, the game is up, should dissolve and start from scratch, or it will become a state for a rich establishment, sort of Soviet Union for upper middle and rich classes, and lose control. It will create anarchy and popular protests for popular change, and a looser association of sovereign states with their own currencies and priorities. That's one way that this can move. The other way is through some kind of a process or some kind of an emergency. There is also the possibility that it will end up becoming, some kind of a federal state. Of course, that's a lower probability scenario, but it is a scenario. DAX and FTSE, yeah, let's have a look at them. So here's the DAX. There it is, quite a strong day today. Here's the DAX, holding above 11,000. As long as it's holding above this, 11,000 area, it can still produce more upside. I'm not very enthusiastic about it, but it has the potential. Closest area of resistance 11,550, but 11,800 is really a key level, previous neckline of this huge head and shoulders formation. So between 11,800 and 11,000, it's more or less a guess game. Now, FTSE, quite a nice rebound. But I'm monitoring this as a potential formation, which is going to be bearish if that proves to be the case. We are anyhow approaching a nice confluence of resistances, roughly at 7,300, the 200 daily moving average, support resistance area, and this ascending wedge, if it proves to be an ascending wedge, because it's a premature assumption, right? All of those, give us resistance roughly at that area. So obviously, buying up here at 7,300 makes no sense. From a risk-reward perspective, it's much, much smarter trying to short here for at least a counter-trend move of the short-term, uptrend. Now, let's get some type of a pullback, and then we can judge, what kind of a pullback it is. Is it impulsive in nature? Is it corrective? Before we can make judgment and be more certain if the lows that we found here, roughly at 6,600, were tradable significant lows or some short-term lows. So I think we need to give it a little bit more time, but definitely buying especially the FTSE here makes no sense. Are investors selling fiat and buying gold in many parts of Asia? Asia in general, Asian people in general are fond of precious metals more than Western countries. Personally, I'm more or less with them. I mean, metals will over time maintain their price in real terms. Okay.
Are you ordering Chinese tonight, man?
Not really. I'm not very fond of Chinese food, actually.
Okay. All right. Just the gold, their philosophy on gold.
Yeah, Indians actually are even more fond of gold.
Oh yeah.
Yeah.
And they need. I hope they had it when Modi did that thing about taking certain denominations out of circulation. It saved their butts if they had some gold.
That was interesting. It was an experiment, more or less, wasn't it?
Yeah, I think. Yeah, I don't know if it worked or what, but the Indian currency. I had a guy on Rohit who is very bearish. The rupee.
The rupee.
So yeah, you ever trade it?
Yeah, but it's been like a long time ago. Not that long, but it's been a long time ago.
Yeah,
I agree with him.
Looks like it.
This is what we were seeing the last time we were here. You see this?
Right.
This looks to me like a textbook consolidation in a very, very clear uptrend, right? Let's zoom out.
Yeah. I think he was talking 79 or something like that. So
why not? If we break out from here, we can even be talking about the extension of this last leg. So let's assume that we've already found a low for this consolidation. Let's make this assumption just to get a theoretical target. Yeah, that would target 80, as you say, right? That would target 80. So yeah, I don't know where he got 79 from, but since the target for this is 80, yeah, well, I mean, why not? From a technical perspective, it looks quite likely. EuroQ is breaking uptrend line. Let me see what you're talking about. I pulled it up, but we talked about the rupee afterwards. Uptrend line. So perhaps I should zoom out even more. I don't see some kind of an uptrend line that we're breaking, because you said uptrend, right? This one perhaps. Yeah, but I'm not very fond of trend lines that just pass from 2 points and then assuming that this trend line makes sense without seeing. I mean, listen, theoretically speaking, you can use a trend line after having touched 2 points, right? Theoretically speaking, but practically speaking, if you want to have like some kind of confirmation, I always want to see a third point, right? A third point of confirmation. So I wouldn't be paying that much attention to this. I would pay more close attention to the fact that this move lower so far is channeled. So let's see what happens now that we are actually almost at the channel's support, right? So that's what I would care to see more. Definitely, though, it's under pressure. I mean, we had quite a nice move lower. We had a rebound. Now, this can be part of like a more complex correction to this first leg lower. So I would be a little bit hesitant here. Okay, a little bit hesitant. Let's see how this unfolds. Upcoming recession should weaken raw material demand, copper, etc. Your thoughts? Thanks. Yes. Yes, that is always the case when we have recession. I mean, building materials and such, they always have falling demand. There's no question about it. So, for example, in a recession, palladium prices, copper prices, etc., should go down. Now, depends on the nature of the recession. It will play a big role of what's going to happen to the rest of the iron ore, for example, as well. To the first example of what I was talking about. But now, what would happen to precious metals? It depends on what kind of a recession it is, and how much it produces a stress to the financial system, and so on and so forth. China is 1984 regime. ECB Guterres said discussing new TLTRO. That's the reason for DAX strength. PR China and Russia have been diverting out of USD and US treasuries into physical gold. Makes sense. Absolutely. Chinese sales traced, designed to force price lower, then ambush gold price and make big purchases of physical. Future exchanges cannot honor gold with physical deliveries. That's certain, and that's why I don't know if you've heard that, but I remember explicitly having this conversation on this webinar with Stelios, and we both said that we don't really trust, if something bad happens, we don't really trust financial products for being long precious metals. You'd rather have either a financial product that's fully backed by the real commodity, or even better, have the real commodity, the real precious metal yourself. That's the only way you can be 100% sure that you actually hold the fates of your fortune on your own. So, Coach,
Yes,
I think it's time for the interview, right?
Okay.
I'll wish everybody a great weekend. Don't forget to visit our homepage. You can declare your interest there and get a ticket for the New York Traders Expo, and then also sign in for the get-together there if you want to meet us, as Blake said. Also, don't forget to visit our investment page. This will give you the ability to, contact Trent, Justin, and the crew there. They can really help you find the best broker for your needs, and you can get your ForexAnalytix subscription subsidized through that, or even get cashback. So have a great weekend, and we'll be back on Monday. Thank you, Coach.
Okay, great review as usual, Steve. Have a great weekend. Good hunting. And Norm, thank you. Great to have you back. I'm going to make you the presenter. And here we go. My trading warrior brother, Norm Linsky, is with us. And
Show
Waiting to hear your voice.
You can hear me?
Hi, Norm. I can, buddy. Waiting
Okay.
to see your screen.
Well,
Now I see your screen.
I'm supposed to be back on this other screen, I think.
Okay.
Give me a moment to figure it out here. Oh, not there. Maybe there. Nope, not there. Where'd you go? I lost you.
There's Skype.
All right. What does it look like? There's your. Is that you? That's not you. That's your Skype screen.
Yeah.
Here's
Yeah,
my
so
chart
You're
screen.
probably looking for your notes.
Oh, maybe that's it. Okay, I'll go to my notes.
There you go. I saw them flash. There they are.
All right.
All right. So Norm,
I was looking for that screen we had before you, right? But I guess it's not there now.
okay. Well, everyone, Norm Winsky's with us, and I've talked to Norm over the years many, many times, and he's a great teacher and very good at Astro and GAN and teaches people it, was a former member of the SIBO. So welcome back, Norm. I know you like to select your dates around things that might be happening astronomically. I believe we have a super moon. When is it? Monday or something? Sunday, Monday?
Well, I'll be talking about that. We don't want to give away the story yet. You know?
All right. Well, go ahead. So I'm just reading your mind.
Keep them on.
Certain markets that are going in one direction into these events, you look for some reversals within 24 hours. So go ahead, take it away, buddy.
All right. I only get to come on your show about every 2 months. We don't have time to review the last 2 months, so I'm just going to go back a few weeks and cover what's happened here in the last few weeks and show you some charts. So like Dale says, I'm big on one thing consistently on coming on the show here is I almost always talk about the new moons or the full moons or anything related along those lines. Just sometimes we get a solar eclipse, lunar eclipse, so forth. We had that in January, and so I'm going to go over what happened here the last few weeks. So one of the things we watch, I do a lot of stuff related to the stock market, and so one of the things we have every year at this time of the year is the January barometer. Okay, what's the January barometer? January barometer, first of all, comes under, most people don't know this, but it's sort of Wall Street lore. The January barometer, as January goes, so goes the year. That actually comes under the umbrella of a fractal type model, in that you take a small piece of something and studying that, you can extrapolate out what the bigger picture might look like. And so the January barometer, you look at January, and if January is up, there's a high probability that's about 75% has worked since 1950. This is not my statistics. Somebody else that did a statistical study on this, and it works about 75% of the time that if January is up, the stock market will close up for the year. January's down, the stock market will close down for the year. So how did it come out this year? Well, we had a strong up month for January, indicating that we should have an up year for the stock market. Okay, doesn't work every time, but it works a high percentage of the time. Next, let's talk about another. For February is my forecasting for Fun Fest month, where I pull out all the some of my favorite forecasting models. So that's why I'm going over these now. Another fun forecasting model is the Super Bowl model, based on the U.S. Super Bowl, and the NFL, National Football League, is divided into two conferences, NFC and AFC, in the pattern, which has worked over 80% since they began the Super Bowl, back up I think about 1967, is that if the NFC team wins the Super Bowl, that's bullish, the market will close up. And if the AFC team wins, that's bearish, and the market will close down. So what happened there was, and now here's been my theory, is that the January barometer, because January ends on the 31st of January, and the Super Bowl isn't played till the next week, that the January barometer most of the time should be able to predict who's going to win the Super Bowl, because they're predicting the same thing. Unfortunately, this year is the first year I've seen in a while where they are in conflict, because the New England Patriots, the AFC team, won, and that's now the Super Bowl is bearish, and the January barometer is bullish. So now we have a sort of a battle here between two these two indicators. So we'll have to wait and see how they come out. Now on the back on the 4th of February, just after the stock market closed, we had a new moon, and at apogee. What is apogee? As the moon goes around the Earth, it's not a perfect circle; it's elliptical, and there's a point at which the moon is close, and the point at which the moon is near, and that only lines up with the full moon and new moon about every 14 months. That evening, there was a new moon at apogee, so that's kind of a special moon. The technical term is syzygy. If you're a Scrabble player, you'll love this word because that could probably win the game for you with all the Z's and the Y's in it. And the pop culture name is the supermoon cycle. So because it was in the sign of Aquarius, the astrological indications were that we should look at copper. And then we also have our usual suspects of our grains, our precious metals, and our financials. So now we're going to look at some charts and see how they came out. The moon works a high percentage of time, but not all the time. And the way to increase your batting average and increase the money you make on these trades is to wait for the market to get to some sort of extreme. If the market gets to some sort of extreme, within, like Dale said, within 1 day of the event, then you have a good chance to make some money. Okay, here's your copper chart. I put a red arrow there because it did not fit my rules. We're off a day. If the high had been over here, not over here, or actually 2 days away, and I am only allow 1 day, so I'm going to have to call that a miss with my red arrow there. Here's silver. I had a tiny bump, so this is very marginal trade, but still I had still marking it as a positive. Had a little bump there right on my day the 5th. With the new moon was the night of the 4th, so we count the 5th. And there was a little bump there on the 5th, so we give that a green arrow. That was a possible positive. Had you sold there, you would have made some money on the short side. Here's your gold, and you can see there's a red arrow. That wasn't as good as the silver. Going to have to mark that as a miss. So the metals were a little iffy. The grains were a little friendlier. Here's your corn there. Had a little rally right into the new moon, and if you sold there, you would have made some money. Here's your beans. Same thing with the beans. The next day they topped, rolled over and went down, and then you had a chance to make some money. The wheat was probably maybe the best of the three. You had a nice rally there, and the next day it topped and it had a sharp pullback right after the new moon. That's more what we usually see when with the new moon or full moon for a turn. Where so you actually have a chance to make some real money.
It's a nice one.
Better than just the single burger at Wendy's. You get the value burger, you get the doubled burger. And after you make a trade like that. All right, here's the S&P. The S&P worked out well. We topped on the 5th, and then we had about a 2% drop over the next several days. You see that? It doesn't look that way, but that's if you, because of the scaling here, but it actually dropped about 2%, about 55 handles. That's good for about, almost $2,700, something in that neighborhood, one S&P E-mini. Here's the bonds worked well. They usually do the opposite of what the stock market's doing. So the bonds made a low there right on, I think, on the 5th. And here's your U.S. dollar, did not cooperate, so that was a miss. And, of course, if the dollar misses, probably the euro is going to go along with the dollar. Now, one of my things that I do is maybe a few of your people out there have heard of the Bradley model. I have my own version of the Bradley model, which adds up the planetary cycles and then plots them on a graph, and so we can forecast the stock market weeks in advance, and that's what I do here. So the blue line, I drew that weeks in advance and put that in the January letter, and then after the fact, I overlay these black bars, those are S&P 500 10-minute bar charts, and you can see I think that was a pretty good correlation there. What do you think, Dale?
Yeah, very tight. Very tight one.
And, we're not supposed to be able to do that sort of thing. If you listen to the people on Wall Street, it's like nobody could ever do that, right? Notice I've marked the moons on here. There's your solar eclipse. It was off about a day for that low. The lunar eclipse worked really well. Look at that. That was a from that top to that bottom over here. That's a drop of 2.1%. And that was topped on that Friday the 18th. And we bottomed the following Wednesday. We had a Monday holiday. And there's your lunar eclipse right there. So see, just I showed you a few misses, but don't discard the moon, because the moon is powerful stuff. All right, now we're going to move on to another kind of forecasting model, fractals. What is a fractal? A good example of a fractal in nature is a pine tree. Pine tree, the branches of a pine tree look like miniature pine trees. We can study the smaller parts of something to figure out what the bigger picture might look like, and that's a fractal. It's it's a repeating pattern at different levels of order. Some of your folks might be familiar with Elliott wave. Elliott is a fractal system. Okay, so we take the price pattern for the early part of the year and extrapolate that out for the entire year, and then I overlay the results, and we'll see how it works out. Here's the user's manual for this. It's all of 3 sentences. That's how simple this is, okay? And so there we go. So look at the blue bars. I published the blue bars back in February last year, and then at the end of the year, I overlaid these black bars on top, and that's, I don't know what you think, Dale. I think that's pretty amazing. You see that?
Yeah, really tight.
Yeah. Right, and you get this for the whole year, right? So, I just did the 2019. So if you folks like this, get a hold of me right away, and you'll have this for 2019. And I got stuff that you're really going to like here in just a moment. I got currencies coming up, so don't go anywhere. All right, here's copper. Copper has been a perennial winner every year. This has been one of my top ones to do this. Here's copper. Okay. And here's your gold. I figure, well, the currency traders like the gold, so I'll throw in a metal there, see how that goes. And wait till okay, fasten your seatbelts, folks, because I'm going to show you the currencies now. Some of these are unbelievable. Okay, so now some of these models, when I didn't go really read this, I probably should have read the user's manual here, which says that we published this back on the 12th of February 2018. Black bar, I already told you, black bar is the actual prices, blue bars are the forecast, and here's the important part: these models can and do invert. Many of your commodities will be inverted. Cattle did not invert, but there's a tendency for some of the commodities to invert, and also for the currencies. So now we're going to go look at currencies. Here's your Aussie dollar. Look at that. That's pretty darn good, don't you think, Dale?
Yeah, nice fractal.
Okay. Here's your euro. Keep in mind, if you like to catch the big moves, this is a model you'll want to have, because, if this thing said it was going to be a big top here, April, May, and then boom, down, and that's kind of what happened. So you can catch a really big move if you get your other indicators lining up, your shorter term cycles lining up to give you the exact day or whatever. And you can jump on one of these big trades and hit a home run, Here's the yen. Every year the yen has been excellent. Over the last 4 or 5 years, I would say. It's usually the inverted model, and there's your yen. Let's do that. All right, that's do we take questions from the folks there?
We can.
If we have time, I'm open for that. Anybody
okay, any questions for Norm? Any questions for Norm? Forex Gal is a fan of yours.
Okay.
I don't know what Calispera is.
Tell Forex Gal to give me a call or email me.
Calispera. Okay, any other questions for Norm? Interest in his free, you want to talk about your free course?
I'll be getting to that in just a moment. Now we're going to talk about what's coming up. Okay. All right, I guess we'll talk about what's coming up just around the corner here after the holiday. We have Tuesday. I think it's about 10:54 Eastern time. We have a full moon at perigee. That's the opposite of what we had on February the 4th. Now we're going to have a full moon with the moon closest at this point. If you go out there, you won't be able to do it during the day, but if you're on the other side of the earth, or if you go out that night, you'll see a full moon, and it'll look extra big because the moon is closer. And you also you get the big tidal effect, a big strong gravitational pull from the moon, often when it's at the full moon perigee. This only occurs about every 14 months. Okay, so what's that? How are we doing on time, Dale?
We're okay.
All right. Back when I was on the floor there, I had a friend who was this guy seldom went. He is very focused on making money and trading, and that's pretty much his life. And I was surprised when he told me at the holidays he was going to go on a vacation. And he said, I know some travel agent got a hold of him and convinced him that he should go to Rio. And he told me, I said he was going to be in Rio for Christmas holiday. I said, do you know that that there's going to be a full moon at perigee about that time? That's that could cause some flooding and stuff. That could cause a problem if you're trying to go to the beach. Oh, it'll be okay. And so in the middle of the trading day, right around that time, I get paged off the floor. It's my friend, and I said, "What are you doing calling me?" He said, "Oh, I'm in my hotel room on board. We can't go on the beach. It's all flooded here." He went all the way to Rio, and he's stuck in his hotel room. That's pretty funny, huh?
Yeah.
All righty. So anyway, that's what we got. We got a full moon at perigee on Tuesday. We're going to be looking at, that'll be in, let's see, the full moon will be in Virgo. So there's going to be emphasis on grains. By the way, the grains took a little bit of a dump yesterday. And if they continue lower into the full moon, that could be a setup for a good low in the grains. So keep your eye on those. I always tell my students, if you don't want to use your brains, trade the grains, because they dance to the moon very nicely. In fact, I think of all the ones I showed earlier, on the moon there, I think the grains behave the best, All right, we got our usual suspects, round them up. We got corn, there's your currencies, Forex. Gold, oil, OJ, silver, emphasis on soybeans because it's in Virgo, stocks, T-bonds, and U.S. dollar. There's your shopping list. If you see any of these at a big extreme by about Tuesday or Wednesday, look for a reversal, okay? Now, Wednesday morning, we have Mercury. We also look at Mercury cycles, and when Mercury gets a zero latitude, as the planets go around the sun, like horses on a carousel, they also oscillate up and down. When they get to their midpoint, and apparently is a powerful energy point, and that often brings a change in trend to the markets. And Mercury has a special correlation with the grains. So we want to, there you go. There's more emphasis. Now we get two cycles that are both powerful for the grains coming together within one day. So this is like a super window here for the grains in particular, and also the stock market. So those are the things you want to be keeping an eye on. Okay, so now we're going to move ahead and tell the folks how they can get fantastic free stuff. If you contact me, there's a possibility you can get my class for free. It's 6 hours. I can teach you how to swing trade. I cover about 30 markets. I can teach you how to day trade. I have people making very nice money on day trading S&P. And I had one guy who signed up with me about a month or so ago. He said he'd been losing money for 2 years. And according to him, he'd lost enough money over the last 2 years to buy a house. Now I got him turning around and making money. So he's pretty happy.
Nice. Yeah.
So there we
pick
go.
one thing and become an expert at it.
I guess so, yeah. So anyway, all you got to do is contact me, and you'll learn. I got several things in my letter that you'll learn about. You'll learn about Astro. Mr. Gann. One of the things that's that people who don't know better argue about Gann. But Gann was an astrologer. That's the main big secret of Gann's success. That he was first and foremost astrological. I talked to somebody who worked with Gann for 10 years back in the early 80s, and he said, first and foremost, Mr. Gann was astrological. So I do astro. And by the way, on the day trading, it's unbelievable. The planets will often forecast a turn in the markets within 1 to 2 minutes. So if you don't want to wait around for a trade, and it works a high percentage of time. So I can prove this to you if you get a hold of me, and we can learn how to day trade. You'll see that that's a fact. I also teach advanced Fibonacci, which includes Lucas numbers. If you don't know what Lucas is, you should get a hold of me. You can learn about that. We also teach fractals, what you just saw there, Fractals are very easy. If you didn't get what I just showed you back here, I could teach you that probably in 5 minutes. I always say that I could teach a 10-year-old to do the fractals in about 10 minutes, you know? So there we go. So get a hold of me. There's my phone. There's my Skype. There's my email. And I'm in
Take a
beautiful,
screenshot, guy.
I'm in sunny Florida there. Get a screenshot of my contact info there. And my phone, 239-594-3939. There's my email, nwinsky@embarkmail.com. Skype, norm.winsky. If you email me, tell me that Dale say, yeah, you're from Dale's class, Dale's show here. And then you get the special goodies. All right. Well, thanks a lot for having me on your show, Dale. Does anybody have any parting comments or questions or whatever?
Yeah, someone was asking for a 1-year forecast on the U.S. dollar. Norm is more swing oriented, kind of a month at a time. Am I correct, Norm?
That's my main thing. But I also have the fractals, which maps out the entire year in February.
Okay, Forex Scale, get a hold of Norm.
I just
get a hold of Norm for that fractal. And Norm, have a great weekend. You're welcome, Marius. Hope everyone had a great week. Contact Norm. It's becoming a lost art. Some of the things that Norm does, a lot of the masters are in another dimension. And Norm's been doing this for 4 decades. So, pick his brain while, he's still available to do so before he decides, that I've had enough with the public. So, Norm, thank you again for edifying our community. Good hunting next week. I'll be thinking of you when I see the supermoon next week and potential reversals that you mentioned. I appreciate you sharing that with us today.
My pleasure, Dale. Thanks very much for having me on your show. I look forward to helping some of your folks.
Okay, buddy. So that's a wrap, everyone, for the week. Remember, don't just count your pips, count your blessings. Getting a reversal in the Dixie from what I talked about earlier in the broadcast. And we'll see everyone Monday. Adios. Enjoy your weekend. Thanks again, Norm.
Thank you.
See you, buddy.